Hey, everybody. Welcome to today's webinar. I'm Neal Kent. I'm the Senior Consultant for Contact Center Compliance and your host of our webinars and summits. I help clients navigate the complexities of marketing regulation through comprehensive risk assessments and threat detection. In that, quite often, we find that companies strive to create a strong compliant environment, but routinely find that their application or their interpretation of consent is the weak link and creates opportunity for TCPA litigation. We felt it important to help you understand best practices. A little housekeeping. Please feel free to throw your questions into the chat on today's Zoom. We will do our best to answer. Anything that doesn't get dealt with today, reach out to me at the end. I'll make sure we try to address that. My contact information will be available at the end of the presentation. And accordingly, it is my pleasure to introduce today's experts, both from legal defense, just top of the top, all the way to some of absolute corporate marketing experts that are dealing with this every day. And at the top, let me introduce Eric Troutman. Eric is a partner of Squire, Patton & Boggs, and he's one of the country's most preeminent class action defense lawyers. He is nationally recognized in the TCPA litigation and compliance. He has served as lead defense counsel in more than 250 national TCPA class actions and has litigated probably by now over 1,000 individual TCPA cases. Even the US Supreme Court has referenced Eric. Eric truly is the czar, and his blog at TCPAworld should be required reading for everyone. With Eric today is Daniel Delnero, who is the litigator in the Atlanta office of Squire, Patton & Boggs. He represents companies facing TCPA litigation, consumer class actions, government investigations. He has been lead counsel in multiple TCPA class actions, and he successfully defeated multiple contested class certification motions and substantive TCPA claims. Daniel is a brilliant strategist, and accordingly, he is our Archduke. From our corporate marketing side, I'm very, very proud to introduce Puja Amin, also known as Queenie. Puja's corporate counsel overseeing marketing compliance and litigation defense for one of the nation's most highly regarded mortgage originators, that would be Loan Depot. Before joining Loan Depot, she was a critical member of the czar of Eric's team there, where she defended some of the nation's largest financial institutions in TCPA matters. And last but not least, it is my absolute pleasure to introduce Jeremy Gladstone. Jeremy is a Director Assistant General Counsel, Enterprise Regulatory Advisory in Capital One's legal department. Among other things, Jeremy serves as Capital One's subject matter expert on TCPA, TSR, CAN-SPAM, and other privacy-related laws. He graduated UCLA Law School and has practiced with the country's preeminent TCPA defense counsel. And with that, I'm going to turn today's program over to Eric, and we'll tee up the first slide, and let's take it away. We've got a full afternoon.
Yeah, thanks, Neal. So incredible, folks, to have all of you with us today. Fantastic panel. I cannot say enough. I mean, just pause before we get started. We've got Capital One's SME on TCPA here with us today in the Kingmaker, Jeremy Gladstone. He's just the man. And on top of that, we've got Puja, who was, I mean, literally the best associate when she worked with me that I've ever had the opportunity to work with from a litigation perspective. She was fantastic. And now, of course, she's gone on to this fabulous career with a little company called Loan Depot. What are they, just like the official mortgage sponsor of the MLB at this point? I mean, what a great company. And I think their stock's doing okay too. So it's really cool to have this panel together. We're gonna kind of pitch it to them for their insights, which frankly are probably gonna be more useful to you than mine are. But Daniel and I are gonna take the lead here, kind of breaking down the law, which is very complex. And look, I'm gonna tell you right out of the gate, we're gonna be like a hummingbird in some areas because this is Masterclass Part 1, and there's gonna be some additional parts. This piece, we're gonna cover everything, but we're really gonna focus on what you're gonna really get your money's worth here today, so to speak, will be on the consent disclosure, the content of the disclosure, and on website placement, right? That's where we're really gonna be focused on, is when you're engaging your customers through a web portal or you're buying a lead, making sure that those consent disclosures are enforceable. Because as Neal said, that is the weak link right now that we're seeing with a lot of folks. And the 2020 case law was bad, very bad on this. And we have to absorb that, take it into account as we move on with our processes into 2021. Okay, let's go to the first slide. We're going to talk about this at a very high level. Hopefully you'll get a chance to get these slides. And of course, if you don't have the slides, you can always check out tcpaworld.com or send me an email and I can get you some content at a just very, very high level. Very high level, and team, feel free to kind of just chime in whenever here, because we're just going to orient right out of the gate. The TCPA and the TSR, right? It's going to require us to have consent in order to communicate with people on their cell phone. It's a pretty basic concept. We can't just be calling people on their cell phones using automated technology without their permission. If you do that, then you're going to get whacked potentially in a big TCPA suit, which could have really drastic damages, millions, billions of dollars in potential exposure. We have to have the express consent of the called party. As we're going to break down, it's a little mysterious exactly what express consent is. That's why we're having a master class about it. And it's actually not even still completely clear whose consent you actually need, but we're going to try to orient here. And remember that the TCPA and the TSR are just one piece of a much larger puzzle that includes the carriers, who these days, the cell phone network carriers, are empowered to do quite a lot of blocking, quite a lot of filtering, if you will, and their decisions with regards to what is consent and what isn't consent don't always match what the FCC and the courts say is consent and not consent. So it's also another hurdle that folks looking to contact their customers have to kind of keep in mind. As we walk through, you're going to see consent for informational purposes, very different than consent for marketing purposes. And getting that marketing consent can be very challenging because of the conspicuous disclosures, the very thought out disclosures that have to be obtained. Okay, these are the things we're going to be walking through today. We're also going to talk about, after you get the consent, you go through all the hurdles to actually get what you need in order to communicate with your consumer. And of course, that consent can still evaporate if the consumer says, don't contact me, or if the phone number changes hands. So there's a lot to kind of keep in mind here, several moving pieces, and we're going to walk through all of it right out of the gate. At the top, Puja, Jeremy, is there anything, just as we orient ourselves, as the viewer kind of comes into this masterclass, that we ought to give them so that they can keep in mind as they're taking notes?
I'll just add that, a couple additional things, right? So not only capturing consent, but also keeping a record of consent is critical for folks here, right? Because once you get into Eric's world, it's all about being able to prove what you have and when you had it. And there's definitely, some lessons to be learned there. And, the other thing I'll call out that's becoming increasingly a practical concern is that consent isn't always enough. And so, in some instances, we're seeing carriers blocking types of messages, regardless of, consent that a caller or a messaging program might capture. And so there's a whole additional piece of consideration there for really unpacking how to get your messages to the end user.
Puja, any initial thoughts? Go ahead.
Yeah, I think documenting consent is extremely important. The burden's going to be on the defense for that. So, my good friends at Journaya and Active Prospect, that's when their products come in handy.
Yeah, that's a fantastic point. And I mean, Journaya and Active, of course, those guys are huge. They're important. They were on the podcast breaking down just kind of what they can do on tcpaworld.com recently. Great products. But okay, so we've got our orientation. I'm seeing the questions already coming in hot and heavy. Neal, this is a great, very active bunch. We're going to cover, I think, everything that's come up. I think we're going to cover, keep them coming though, guys. I love to see it. I love to see it. And if you don't get your questions answered, reach out to us, right? Like, we exist to provide information. That's the mission of TCPA World. I love sharing and interacting. All right, next slide. Let's get this thing moving. All right, so look, this is a master class, right? Normally I wouldn't put these statutory language paragraphs on a screen, because it's like, you get blurry eyes trying to read this stuff. I hate it when lawyers do this, right? This is what they do. They do a presentation on consent and they just like throw up all this language, and you think, oh, thanks, this is useless. But no, it's a master class. So I actually do want you to see this, okay? Because this is the spine, if you will, the bones upon which The entire body of law that is express consent, that is, it can literally fill tomes now, is built on these bones. This is it. This is all there is, right? 47 USC 227. Hopefully those of you watching this know this lovingly as the TCPA, right? That is the statute. That is called the TCPA. Here is literally all the TCPA says. This is it in terms of what consent you need to have. You need to have the prior express consent of the called party. That's it. That's all the guidance that the statute gives us. And you know, when you look at something so thin, it's unsurprising perhaps, or maybe it's very surprising to some, that the courts have made just a monster out of this, right? Because they're trying to figure out what is prior express consent and in what context. Now, the FCC has helped us out. The FCC has helped us out because in a couple of instances, they've refined what express consent means. And what we're going to see is that they have refined it in a way that for informational calls, non-telemarketing calls, not, well, I don't want it to be telemarketing, I want it to be informational. No, informational calls that do not contain marketing content, the ability to get consent is very easy, ridiculously easy. A fiction, as somebody just wrote in. It is very easy to obtain. Marketing consent, however, the same FCC has made it extremely difficult to get that consent. We're going to walk through what that looks like, but we have to keep in mind right now, if you keep one thing in mind, folks, informational consent, easy. Marketing consent, hard. Not the same thing. And when you get those two confused, when you need one or the other, that is a very good sign you're going to get yourself in big trouble. Okay. Now, underneath the statute, which we just saw as a one-liner, we've got two important regs. Okay. These regs are, believe it or not, directly enforceable in court. So when you're worried about the TCPA, you're not just worried about the TCPA itself. You're actually worried about the regulations under this, what's called the CFR, right? That's the Code of Federal Regulations. And this little section, 64.1200A1, 2 and 3, right? This is how lawyers live. You wonder why, you know, Squire Patton Boggs has this huge team of lawyers, because we have to get into these little regs and we're constantly reading every little small little line. But here's the language, right? Express written consent is required for any call that includes or introduces an advertisement or constitutes telemarketing. Further definition, telemarketing means the initiation of a telephone call for essentially any purpose related to the purchase or rental or investment in property, goods, or services. Okay, so anytime you're encouraging somebody to invest or to purchase a product or a service, that's going to be marketing. All right, so you're going to need to have that express written consent. Of course, when you're talking about a number on the DNC, and we're going to have to pause here and talk about the difference between the TCPA and the DNC. They're related, but they're slightly distinct. Okay, when you're talking about a number on the DNC, you're not talking about automated technology now. You're talking about any marketing call, even manually dialed calls to a number on the DNC that is a residential line. You are going to have something called written permission evidenced by a signed written agreement. So under the TCPA, you need express written consent. Under the DNC rules, you need written express permission. Can we not get our words aligned, guys? Is there a difference between consent and permission, dear Congress and the FCC? Luckily, it turns out there isn't. So the standard essentially under the DNC is the same standard that is under the TCPA regs. So at least we have kind of that aligning, even though the language is slightly different. I want to pause here, and Archduke, I want to throw it over to you very briefly, because I think it's important that everyone just kind of orient on informational consent for a second. This is not a today problem, but it is a tomorrow problem, and you folks want the masterclass environment. So what we need to think about is today, informational consent, easy to obtain. Anytime that consumer provides a phone number under the FCC's guidance, the caller can call that number for any purpose that is, quote, closely related. Closely related, we're going to break that down. Closely related to the purpose for which the number was provided. That's today. The problem is that ruling came from a declaratory order from the FCC back in 2008. Why is that an issue? Because the Supreme Court has recently ruled that those FCC determinations may no longer be binding, because the Hobbs Act, which gave them power, has been undermined by the Supreme Court. Daniel, what's your take? is this still going to be binding law? Can our listeners still rely on the FCC's old ruling that informational consent is presumed anytime that phone number is provided?
So under the FCC ruling itself, no, I would not rely on it, because after PDR network, it is very much an open question whether that declaratory ruling is of any force or effect. However, courts have generally followed that. So the majority of circuits have established that for an informational text, such as a text related to collection of a debt, providing other meaningful information about a transaction in which the recipient is involved, express consent rather than prior express written consent, courts do generally uphold. Now, a lot of those cases go back to the 2008 order, but many of them go before that too, before express written consent became a requirement. So right now, under the current market, it is relatively safe because you have existing case law, not just the FCC order. I would not be surprised if we start seeing challenges to that, though. And you do always have the risk of an informational text being declared dual purpose if it has some other extraneous marketing or business related purpose, arguably beyond the scope of the transaction in which the number was provided.
All right, let's move on to the next slide. Thanks for that. I'm trying to just absorb some of these questions as we go here. Somebody asked, does consent come with an expiration date? Express written consent does not come with an expiration date, although it can be revoked if the consumer asks for calls to stop. So let's look at when is, yes, Neal.
Jump in and ask Puja and Jeremy specifically on that point. So technically, prior express written consent, unless revoked, doesn't have an expiration date, if you will, but yet inquiry, right? Inquiry does come with an expiration date. So the point to Puja and Jeremy, even though legal standard may be no, do you guys sort of shorten that down and just not make, from your customer standpoint, how do you view expiration of TCPA consent? Not from a legal standpoint, but from a marketing practice.
Well, from a marketing practice, it's kind of common sense, right? You don't want to be calling folks 5 years after you got the initial consent. You want to be reasonable. If you were a consumer, when would you expect a call after you've given the consent? And, that reasonable standard is, would you want to be called 5 years later, 3 years down the line? So that's the way I see it.
That's how we see it too. And to the extent we capture consent related to a product that a customer ultimately signs up for, the consent will last the length of that product or the length of the customer relationship. So on prior express consent in particular. But yeah, we try to limit it to the scope of the customer relationship.
And Jeremy, that's a fantastic point. Neal is a great question. So we want to think of consent as durable and lasting as long as the need that the consumer is reasonably anticipating the number being provided for lasts. To Puja's point, if you're talking about, hey, look, I'm interested in a mortgage loan, that's not going to be, I'm interested in a mortgage loan for the next 5 years. I'm interested in the mortgage loan right now, and maybe in the next week or 2 weeks. And where exactly it cuts off, right? That the regs say 90 days for a DNC, which is different than express written consent. Express written consent does not expire, but a DNC inquiry would expire in 90 days. Maybe common sense in this instance says 90 days is how long a consumer might be in the mortgage market. I don't know that, right? There's analytics around that. I'm not qualified to give that assessment, but some period of time. To Jeremy's point, though, when you've got a deposit account with Capital One, great bank, why would you expect the bank not to call you 5 years from now if you have some issue with your deposit account? Of course, you provided the number because that's where you want to be contacted. And if some knucklehead is trying to, steal money out of your account, you'd want the bank to still contact you on that number. So express consent should be viewed durably through the lens of the consumer. And so much of what we're going to talk about here today, and so much really of TCPA compliance generally, is about the consumer's expectation. And I love, Puja, you putting yourself in the shoes of the consumer. There's a lot of wisdom to that.
And then I want to add that you run the risk of calling reassigned numbers after you're calling folks after a number of years, right? You have to remember that consent is tied to the called party, not the phone number. So, you know, the more time that passes on, there's a likely chance that the number has been reassigned to a new person.
It's not uncommon, and I know this is not on topic of what we're talking about this moment on the slide deck, but it's not uncommon for folks to use, for instance, a sunsetting period. I know, Neal, that's what you were driving at, where as a matter of corporate policy, for instance, you'll say, look, if it's a lead, we're not going to call them after 90 days unless they ask for more information about some future event. For instance, hey, call me back if the rates drop or something. Well, then that might be consent to exceed 90 days if the rates drop, say, 180 days from now. Similarly, you might want to consider a refreshing, if not a complete sunsetting, in the servicing context, where perhaps you're relying on a vendor, we'll talk about this in a second, to check for phone numbers changing hands. So great stuff as always. But look, here's a quick slide, folks. When is written consent needed? There's 4 times when you're going to need written consent. All right, it's right here. I'm going to just give them to you real quick. We're going to move on to the next slide. We've got a lot to cover. Anytime you're making a call to a cell phone, including business cell phones, using automated technology or pre-recorded voice technology with any marketing consent, any marketing, content, any marketing content at all, okay? Even if it's a dual purpose, it's kind of informational, but really it's also kind of marketing, it's marketing. You need express written consent. Anytime you're making a call to a landline using a pre-recorded voice or artificial voice for marketing purposes, you need that express written consent. Any call to a residential landline on the DNC, even if you're dialing manually, okay, this is the important thing to keep in mind on the DNC. It applies, the TSR applies, even if you're dialing manually. That's the big difference, okay? TCPA is only automated technology and pre-recorded and artificial voices. DNC is manual calls too, okay? So you're not gonna have the defense of Facebook coming out and the Supreme Court saying, oh, you know, a dialer is, if this happens, a dialer is only something that calls randomly or sequentially. Even if you're dialing manually, not using an ATDS, and the number is a residential line on the DNC and you're marketing, you need that express written consent or an inquiry or an established business relationship, okay? That's a whole nother pocket of issues under the DNC and the TSR rules that are separate from the TCPA. Under the TCPA, having a business relationship, not enough to use that automated technology. Under the DNC rules, that business relationship does allow you to contact for marketing purposes manually, okay? Hopefully these distinctions are now clear. Finally, this is a really interesting little nuance that actually, of all people in the world, the kingmaker himself, Jeremy Gladstone, flagged for me, right? The czar is supposed to flag things for him. He's flagging stuff for me, which is if you are using a pre-recorded call to contact a landline for non-marketing purposes, even for informational purposes, you have to have express written consent after 3 calls a month. And that's under the new Traced Act regs, under Section 8 of the Traced Act. The FCC has now modified the CFR. We talked about the CFR, and they've done it in a way, we think unintentionally, that requires express written consent for informational pre-recorded calls. Now, mercifully, this edit to the CFR won't take place for some time. It's going to be effective 60 days after the office of the the OBM does some work they have to do under something called the Paperwork Reduction Act, and the implementation of this section is stayed kind of indefinitely. But if you're a company that uses pre-recorded calls to contact landlines for informational, for survey purposes, for charity purposes, you need to understand that that exemption that used to exist is about to go away. And when it does, you're going to need written consent in order to continue those campaigns. Hopefully everyone understands that. Okay, we'll pause here. Neal, questions? Puja, Jeremy, thoughts?
Hey, Eric, just a little inside baseball on that last piece, which is that it's largely believed that this limit on residential calls was accidental. And so the trade groups right now are pushing the FCC to change this rule to make it prior express, not prior express written consent. And I think that that's important, especially for informational callers out there, because in many cases, institutions don't have a framework in place to cap to cap residential calls at 3 a month, because historically that hasn't been required. So this is actually pretty impactful, and I think it'll be interesting to watch how this plays out.
You know, we're sort of seeing to that point, Jeremy, of that there have been that sort of request to clarify this. I think it's going to be at sort of the end of a long list of clarifications. So those of you on the informational calls, pay attention to those limits. And the other thing, I'm noticing some of the questions. We have a lot of questions concerning really focusing around implied or getting this informational request. From my chair, what I see consistently and where financial institutions, other marketers get in, is that they've gotten or they're relying on, I'm going to say it, an implied consent, if you will, don't yell at me for that one, and they're managing to that, but then marketing. So we'll send and tag a message to an informational message, and they don't have controls to separate informational from marketing. And that's essentially a big problem. It's internal controls of your messaging based on consent, and consent is dynamic.
Yeah, no, Neal, that is death. What you're describing. Look, presumed express consent. We don't say implied consent. Never implied. Presumed express consent, which the FCC gives us. Again, it's pretty durable. It's wonderful so long as it still exists. To Daniel's point earlier, it might not be around very much longer. Okay, so love it while you've got it. But you cannot make the mistake of using presumed express consent. For instance, the classic example, I'm not going to pick on Loan Depot, but the classic example is you're a mortgage servicer, right? You've got plenty of consent to contact those individuals, your servicing portfolio, because those consumers gave you the phone number in connection with their loan. And if they've got a late payment or something's going on with their account, or we need some more documents, or they haven't made a tax payment or something, you can absolutely contact them on those phone numbers that they've provided to you in connection with that servicing work. That's informational calling. That is not marketing. That's fine. But the second that you want to start trolling your servicing portfolio for folks that might want to refi and looking for ways to blast them with text messages or phone calls on that purpose, you've got yourself a big problem, because you have to have written consent from those individuals. Just because you have that business relationship does not give you the right to utilize automated technology to contact those consumers on those numbers. Again, that's different than the TSR and the DNC rules. And this is why people get so confused, right? You've got that established business relationship. That's fine from a DNC perspective. You can call them manually, but you can't do it using automated technology. And if you do, you're going to get yourself just blown up. I mean, I cannot tell you how dangerous that is. And not having those controls, not having a consent flag in your system of record to designate whether or not that cell phone number came from the consumer or was, for instance, skip traced. And if it did come from the consumer, that the consumer gave either oral consent, which is not necessary, but they gave oral consent versus written consent. If you don't have that striated in your system of record, you're setting yourself up for harm, right? And that was Jeremy's point earlier.
Right. And one other key point around informational consent, presumed express consent as opposed to written. If you get sued, you always prefer to have written consent. So even if everything was perfectly legal, proving non-written, oral, or presumed consent is a lot more difficult than just holding up your writing and saying, yes, here it is. So if you're in a situation where you can get in connection with your normal business plan operations where you can get written consent, it's always the safer route, rather than relying solely on presumed express. Presumed express is almost a backup, if you will, rather than necessarily building a strategy around it.
All right, let's move on to the next slide. All right, so informational versus telemarketing. We're going to move pretty quickly because I want to get to the good stuff where we start looking at the disclosures and the website formats. But it is important, again, we keep talking about the difference between informational and telemarketing when it comes to the level of consent that is needed. Very big differences, but it is important. I cannot emphasize enough that you understand that a message that you want to be informational may or may not be informational. And if there's any hint of a pretext where, it's informational, but really you're trying to get them to do something that's a marketing, right? The classic example again being, hey, rates are dropping, just letting you know, just passing on the information that rates are dropping. I mean, there's no way, right? That's going to be viewed as marketing because you're plainly trying to solicit some sort of response that's going to lead to that consumer purchasing your product. Now, the classic other example is like the FedEx situation where there was a case last year that really made waves, right? Where FedEx was telling people via automated text, hey, your package is stuck in customs. That feels pretty informational, right? Your package is stuck in customs. What's wrong with that? Well, the court said, well, the FedEx was really telling people that because the option would be to have the package destroyed or shipped back. And if it was shipped back, FedEx would get paid for shipping it back. So from the court's perspective, the message actually was dual purpose. Sure, it was to let them know that the package was stuck in customs, but really it was because FedEx wanted to get paid to ship the package back. At least that's what the court found. So you have to be careful here, right? Anytime you're reaching out to a servicing portfolio or to a group of individuals that are your customers to offer any information related to a service for which you will get paid, it's a red flag. That doesn't mean that it will necessarily be viewed as marketing, but you got to think to yourself, when I'm sending this informational message, am I going to end up getting paid from some of these individuals that I'm contacting outside of, for instance, something like, hey, look, you owe me money on an existing account. Okay, that's different, right? Obviously, you're looking to get paid, but that's debt collection. It's informational. It's a payment reminder on an existing obligation. Anytime you're looking to encourage the purchase of a new product, a new service, a new fee, right? You have to be careful. All right, so that's all I'm going to say on this subject. Another future express consent class, masterclass, we'll talk more about informational versus marketing. That's all we're going to say today. Let's move on, Neal. Same thing here. We're going to be real quick on whose consent is necessary. I could spend 35 minutes talking to you just about the line between who the called party is and the whole background, what the FCC has done in the court's interpretations. It's fun. It's really neat and nerdy. But at the end of the day, what you need to know today is that you have to have the consent of the subscriber or somebody that's actually using the phone, okay? And that was Puja's point earlier. You heard her tell you that the longer you are calling a number, the higher the risk that that number has changed hands. And if that number changes hands, you, the caller, are liable for it. Probably strict liability. Now, we've here at Squire Patton Boggs, and we've dreamed up in our laboratory some pretty good defenses as to why that might not necessarily be so. But to be safe, you want to assume that if that phone number changes hands, you got to stop calling it. And there's a number of tricks and tactics that you can deploy. Sunsetting is a big one, and utilizing vendors to verify whether or not that phone number is still in the hands of your customer is pretty critical these days. I don't want to linger long here, but Puja, Jeremy, do you want to kind of ruminate on this, or are we feeling like we've covered it as we move on to the next slides here?
I'll just add that the FCC is coming out with a reassigned numbers database, which will address some of the issues there. And that's probably 45 minutes of masterclass for you another day, but it's good to just note that there'll be some developments this year in that front that will help a little bit with the reassigned numbers piece.
Puja, were you going to chime in?
Nope, I was just gonna, confirm that there are challenges around who you're calling. You don't know who you're actually calling. If someone entered an incorrect number, dialed it, so it's challenging. But to Eric's point, there are vendors out there who can help, limit those challenges.
Very, very quickly, Eric and you and I have talked about it. We have our client, we have our clients run something called wireless reassign, waiting. There is no one call safe harbor. If you think you're calling John Smith on a mobile phone and Jane Doe answers, the FCC expects you to know. So we do recommend yesterday, running something called wireless reassign, which confirms from your last date of consent that that person still owns that phone. If not, you have a problem. And not only that, in 5 states, let's say New Jersey, you lost consent. Now you're violating state law by manually dialing, auto dialing a mobile number that you've got no consent calling. So yes, there will be a federal database at the end of the year, but I would not wait.
All right, let's move on to the next slide here. I think we're getting to the good stuff. All right, so what is prior express consent? Look, here's the language. I think it's more fun rather than just look at the language. You're going to get the slides. You can study it. You can look at the CFR there at 64-1200 subsection F9. You know, that rolls right off the tongue. That's where you're going to look at the language. That's the FCC's determination as to exactly what you have to have in your written express consent disclosure. Okay, don't listen to anybody that tells you you need less. That reg is what you need. Don't let anyone tell you otherwise. That's the law right there. It's on the screen. Take a look at it. Look how dense it is. Okay, there are a lot of pieces to this. These disclosures cannot be whittled down to one line. Okay, there's critical things that have to be included. Let's go to the next slide. We're going to take what we just saw right there on this big screen here, this big block of text. Next slide, and we're going to apply it. I'm going to show you a good disclosure. Maybe, I don't know. Can we go to the next slide? Maybe we're going to be stuck on this slide. Neal?
Brian?
Are we broken?
Yeah.
We stuck?
There we go.
Here we go. All right, so you saw that big, long thing of text. Okay, I'm going to break it down for you. This is my gift to you. A free, properly worded disclosure. Okay, this would cost you hundreds of dollars, thousands of dollars if you had us do it for you. Okay, here it is. It's free. Take a look. I'm going to break down every piece of this for you and tell you why you have to have it. Okay, based upon the reg we just looked at. The first line. Okay, this is for like a web form. By clicking accept below. Okay. You remembered, if you read everything on that last slide, you memorized it, we're going to pretend like you did that, okay, as we have this discussion. Part of what you have to have is a signature. In order to have a signature, the consumer has to understand that by clicking a button under the e-Sign Act, by clicking that button, they are accepting the terms of the written agreement, okay? So clicking that button is going to constitute a signature, but only if you tell the consumer that by clicking that button, it's going to be the acceptance of a disclosure, okay? I know that sounds dumb because the disclosure is like, for instance, right near the button as we're about to see. So it's implied, there's that word implied, that by clicking the button, you're accepting the disclosure. No, you need to say it, folks. You need to say it. By clicking accept, by clicking the button, I expressly consent, okay? So now we move on to the next piece of the disclosure. You have to, no, just hang out. I expressly consent to whom, right? According to the reg, you have to identify the seller. We're gonna have a whole slide on this momentarily, but it is important that you understand that the consumer is consenting to somebody specific contacting them. Although they can be contacted by third parties operating on that specific company's behalf, but you have to say that, okay? The disclosure has to identify the seller and identify that they might be contacted on behalf of the seller. All right, so that's points 2 and 3. Now, here's like a super critical one that people want to try to gild the lily and get away with, and you will not get away with it, folks. You have to use the word marketing or promotional. Has to be in the disclosure. The reg says it has to be in the disclosure, okay? So you have to say marketing or promotional so the consumer knows that they're adopting a disclosure, accepting terms that are marketing in nature. They're going to get texts that are marketing or calls that are marketing. They have to agree to that, okay? Next, if you're going to use texts, you should say texts, okay? Don't just rely on calls and then put the word calls in there and then start texting. If you're going to text, you should mention text. All right, moving on to the number 6 point down there. Another absolutely critical piece that people try to get away from, but you cannot. You must use the word automatic. You must tell the consumers that these are going to be automatic messages. It's a critical piece of disclosure. It is not enough to say you're going to receive marketing calls from us. No, you're going to receive automated marketing calls from us. Okay, that's critical. And if the consumer is interested in your information and your products, the consumer has no problem giving you that consent. If they don't want to give you that consent, you're probably not going to sell to them anyway, all right? And more importantly, if they're not wanting to give you that consent, they're going to sue you if you contact them that way, right? So make sure you have that provision. You also have to mention pre-recorded or artificial voice messages if you're going to use that technology. Now, if you're not going to use that technology, you don't have to include that language. But if you don't include that language and then later on there's some mission creep and you change your mind and you decide, you know what, it would be pretty cool to do a ringless voicemail or something, it's too late. You can't go back in time and re-engineer that consent. You're stuck with what you have. So you have to be very thoughtful. And chances are pretty good you just might want to include the language just in case. All right. Here's another piece that folks forget about, right? You have to say that the messages that are being received are related to a product or a service that they're inquiring about, right? This is not just marketing consent for all purposes. That doesn't exist. Okay, let me make sure that you all understand there is no disclosure that you can possibly draft that will give you consent to call a consumer for anything at all from a marketing perspective. A court will not enforce that. What you are getting is permission from that consumer to market about something pretty specific. It doesn't have to be, specifically a 30-year fixed rate on a HELOC, okay? But it is going to be finance products, okay? If you get a nice written disclosure and you're, at a bank, I'm not going to pick on Capital One here. I know they would never do this, but some other bank that says you've got permission to contact me for marketing purposes, period. And they try to sell that consent to some third party, or instead the bank wants to sell circular saws all of a sudden, and they start saying, hey, look, we sell circular saws now, we're marketing to you our circular saw, 0% chance that's going to be enforced. You're going to end up dead in the water, okay? Your consent has to be limited. You have to understand the limitation of your consent. The consumer has to understand what consent they're giving, and the disclosure has to align, all right? Finally, this last line, you cannot say, or rather you have to say, that the consent is not required as a condition of any good or service. And here's the trick, it really can't be a condition of any good or service, right? So if you operate a company that relies on web form lead generation or web form submissions as a kind of an entry portal into your ecosystem where you can provide a good or a service, right? Think of companies where you go online and you fill out your name and address and phone number to get connected with a service provider that will fix your refrigerator. There has to be an alternate means for you to give that service to that consumer rather than them giving you the express written consent. You have to be able to offer that same service. It's kind of like an ADA disability accommodation. You have to be able to give that consumer who has the disability of not wanting automated messages, they still have to be able to enjoy the same level of product and service that somebody who has agreed to that express consent, that express written consent, is going to enjoy, all right? That process has to exist. Otherwise, this line isn't true and the regulators will cream you. All right, I talked a lot. Look at this beautiful disclosure. I've broken it down. Don't let anybody tell you that you need anything less than this. Just not true. I'm gonna pause. Jeremy, Puja, dying for your thoughts.
I mean, as a marketer or as a lead seller, there's just no excuse not to have a good disclosure. You want people to contact you. You want to get good leads, and you want people to contact you. You want to contact people who are actually interested in your product. So here it is. There's just no excuse not to have these elements that Eric has listed out here.
I completely agree, and I'll just say this is a great place, and Eric didn't pay me to say this, but this is a great place to look to outside counsel, because an ounce of prevention here is worth literally millions of dollars. The other thing I would just note is whenever you come up with a disclosure, keep a record of it, keep the date you came up with a disclosure, and if you change it down the road, those records will be extremely valuable.
That is a huge point, Jeremy. There's a lot of nuance to what Jeremy just said, folks. I'm not going to explain it all to you publicly. There's a lot of nuance to what he just said. Feel free to reach out to me. We can kind of break that down further. Hell of a point, Jeremy. Hell of a point. Okay, let's go on to the next slide. Oh, this is a good one. We're going to talk about, this is huge, folks. It's a big change in the law. This is something, again, I've not been hammering on TCPAworld because I don't want this publicly disclosed, but I mean, it's something you got to be aware of. There's been a change in the law, all right? A year ago, if you were looking at a disclosure, for instance, give you a classic example that says, By clicking here, you agree to have up to 4 lenders contact you regarding a refinance. All right. The consumer knows that they're going to the website because they want banks to contact them. They want to get the best quote. They figure if there's competition between 4 banks, for instance, they might get the best rate. So they sign up for that. They know that that's going to happen. The lead provider, the website, is true and honest, and they only give that lead to 4 banks. They haven't broken any rules, right? They did exactly what they told the consumer they were going to do. And in fact, 4 banks call that consumer, right? On exactly the purpose for which the consumer asked. Nice, clean fact scenario. Nobody's cheating. We're not going over the consumer's consent. The consumer knew exactly what they were going to get, and they got nothing more than what they asked for, right? Nice and clean. A year ago, that would have been fine. I would have no problem with that process. Today, you have to pause. And the reason is that there was 2 new cases, they're right there on the screen. 2 new cases have come out in the last 6 months that have said it's not enough that the consumer knew that they were going to be contacted by lenders. You need to know exactly who the lenders are. The seller has to be named in the disclosure. And we see this, it's a very problematic thing in the mortgage vertical, in the insurance vertical, right? Where an insurance web form, the insurance brokerage might not know, right? What insurance company is going to be able to offer the services that this specific consumer needs. And yet they've got to identify all the potential service providers, all the potential insurers that consumer might be contacted by based upon the information that consumer provides. Well, this is a real problem. It's a real tug and pull because we know the FTC really hates to see hyperlinks that have 200 names on them, right? They think that defeats the consumer's consent. So on the one hand, the courts are saying the seller has to be named. Hyperlink is fine, but the seller has to be named. On the other hand, you've got the FTC saying you can't have too many names in a hyperlink. So a company that's selling leads, a company that's in the business of connecting consumers interested in products with sellers and the manufacturers of goods that provide those products, it's a legitimate profession, folks. It's a legitimate business, and it serves an important function in this country. Those folks have a real tough time now because they're stuck in the middle, right? And you keep using the word dynamic, Neal. This is where dynamic consent is really the future, where as this individual is inserting information in a web form, your consent disclosure is being built dynamically to take into account the information to process which potential service providers are actually likely to call based upon the data points that are being provided by that consumer in real time to populate a disclosure at the end of the flow, at the end of the consumer experience before the submission is submitted that actually identifies the service providers that are going to be able to meet that consumer's specific needs. That's the future. This is why we're having a masterclass. That's the future, folks. Now, I know present state, you probably don't have the technology to deploy that. So present state, what can you do to protect yourself? If you're a seller, you got to tell everybody that is generating leads for you, my name comes first. If you're Loan Depot and if you're Capital One, that's easy enough to do. The market share is going to compel that lead provider to do your bidding. I know that's not always the case, though. So this is amazing. This is new. This has changed, right? This was not the case 6 months ago. This is the case today. And I'll tell you, it's only 2 district court cases. All right. So this is not binding law. This is not like a regulator has come out and said, this is the law now. The Supreme Court hasn't come out and said, this is the law. Tomorrow, a case might completely disagree and say, that's ridiculous. The consumer knew 4 lenders were going to call and 4 lenders called. What's the big deal, right? And frankly, that's where the law should be because, again, consumer expectation should be the touchstone of what is verifiable and decent consent. But today, these are the recent cases. So we have to take that seriously and with concern and with prudence. All right, I'll pause again. Neal, what do you think?
I agree. When I saw I reached out to you when I saw the pill pack, and the question I had is, I know we're waiting on the Supreme Court to give us a definition of ATDS, and I think these cases warrant more review. And this is of the level of marks that
these are critical. And to your point, Neal, not to cut you off, but remember, PillPack was a DNC case, folks. That means if you're contacting people on the DNC, even if you're calling manually, even if Facebook comes out in our favor, this is why consent is so important, even in light of Facebook, you still need to be keeping this in mind, because in that case, in the Matson case, for instance, the court found that the seller violated the DNC by allowing a third party to make calls on its behalf, even though that caller, that consumer knew that those calls were going to be coming because the consumer's phone number was on the national DNC list. And that is incredible that business got hung out to dry, and a willfulness finding was possible as well. Just wild. I don't know, Jeremy or Puja, do you want to weigh in on that one, or should we move on to the next slide to get to the fun website format stuff?
I think we should go give the people what they really want, Eric.
Let's give the people what we want. We teased it long enough. Let's get to it. Next slide. Okay, here's some ideas on how to capture consent. You folks are smart. If you've got questions, reach out. Lots of channels, right? Any way you're communicating with your consumer. You can actually use text messages if you build your process correctly to get express written consent. I know that's interesting because you have to have express written consent to send text, and yet you can use that process to get consent. We can talk about it. The texts have to be sent manually and or as an informational component of an inbound outreach from the consumer. Different masterclass, folks, different masterclass. Next slide. So much fun. This is so much fun. All right, here's the good stuff. This is what you really came for. We've got 9 minutes to cover it. 2020 was a disaster. It was just a disaster when it comes to enforcing website disclosures. If you are a business that relies on web form submissions and you are not aware of how dark a year 2020 was, you need new outside counsel, okay? Because you should be fully informed that case law in 2020 was terrible. Case after case after case refused to enforce online disclosures where consumers were clicking on buttons, seemingly accepting terms and disclosures and consent disclosures, but the courts were refusing to enforce those because sometimes some pretty ticky-tack stuff, all right? Here are things to keep in mind, critical things to keep in mind. It's on the screen. I hate just reading. I never do that. In this instance, I'm gonna do it because I wanna reinforce it. It's really important. Your disclosure has to be close to the acceptance button, okay? It has to be right next to it. Above the button is preferred. It's not technically required. You can have it below the button, but if it's below the button, you have to have a very elegant form. It has to be very, very clear that this disclosure is being accepted by clicking this button. You have to be able to see it very clearly. Hyperlinks must be obvious and underlined or capitalized. You can't just have a hyperlink that you can't really see that's going to link you back to a disclosure or to a term and condition or to the identity of a seller or to the purpose for which the consumer can be called, right? All the things you might want to use a hyperlink for. You can use hyperlinks, but they've got to be blue. They've got to be underlined. They've got to be clear. The disclosure must be in readable font. Please, please, please do not give me a disclosure that is light gray against an ashen background. Okay, don't give me a disclosure that's canary against a yellow background. Okay, don't do that. Your disclosure has to be clear. It has to be readable. The website can't be cluttered, right? Your disclosure where that consumer is accepting consent should be a form that is almost just by itself on a screen. So there's no question that that consumer knows when they're engaging with that website as part of this experience that consumer is on this web form, that there's no question that in this moment, at this time, when they click this button, they know exactly what's about to happen. They're going to be getting phone calls, right? And presumably, again, to Puja's point earlier, that's what you want. You want consumers that are giving you leads because they actually want to receive information via phone about your product and service. The disclosure, as I said earlier, it's just critical. It has to actually say, by clicking the button, you are accepting this disclosure. There were 3 cases last year, 3, where the court said, yeah, your disclosure is pretty clear. It's next to the button, but it just doesn't say by clicking the button. So how's the consumer supposed to know, right? The court is not going to help you. The court is not going to connect dots for you. You have to do it for the court so that you can walk in and you can say, it said right here, by clicking the button, the consumer was agreeing to the disclosure. The disclosure is close by. There's no question that the consumer knew what was happening. Then the court will enforce. If you make that court connect any of those dots for you, you're just giving the court an excuse. And last year, the courts took the excuse over and over again. Finally, the disclosure must be apparent at the time the user clicks the button. It can't pop up after the fact. It can't be before the form or after the form. I see these really weird consent forms sometimes where a phone number is provided on one screen, the consent disclosure pops up on a third screen, and then the final submission button's like on a fourth screen. Don't do that. I mean, arguably you can enforce that, but courts want to just see it all laid out. One nice little package, right? Make it nice, make it clean, all right? I'll pause, let Puja and Jeremy weigh in, then we're gonna look at some websites that weren't enforced in 2020 to give you kind of a visual so you kind of have a better sense of it.
And from a compliance standpoint, the intent of the TCPA was to essentially limit the number of unwanted telemarketing calls. And obviously obtaining consent is the forefront of it, but also making sure that your vendors understand the importance of obtaining consent, because you can be as buttoned up as Jeremy and I am, but if your vendors aren't, you're going to be in trouble.
Yeah, that's a great point. And the other thing I'll just note here, pretty much everything on this slide is contrary to most of the design guidance that any good designer would give you. It can be really ugly from a design perspective, and you will get pushback internally. But my only advice is to stick to these points because long term you can get around design issues, but you can't get around legal issues.
All right, let's give them the eye candy, Neal. Next slide. Examples of things that courts have found unenforceable. This is a real life example, folks. A website that was used by our good friends at Subway. I'm not picking on Subway. I love Subway, great sandwiches, but not a great disclosure form. You see up top, there's where the phone number gets entered. There's an I'm in button. Plainly, the content should be clear to a consumer that by providing that information, what's going to happen? Well, they're going to get offers via the phone, right? That's literally what the disclosure up top says, the description says, but that's not a disclosure. The disclosure way down at the bottom that you can barely read has all the key language in it. Court said, no way, no way. Just because the consumer should have known that they were going to be receiving messages doesn't mean they've accepted all the terms of the disclosure. Those are all the way down there, far below the button and far away from where the phone number was entered. Not going to enforce it. Next slide. Here's another one. Take a look at this. Okay, here we've got a zip code entry. We've got tiny, tiny little terms and conditions that include the disclosure. And then it has a button that says, this is correct. Continue. Neither the disclosure nor the button said that by clicking this, you're accepting the disclosure. The court said this is correct is confusing because the consumer thought all they were doing was verifying the zip code that was entered above, when the caller wanted to use that click as consent. The court said, no, this is a confusing experience. Sure, the disclosure's there, but because it says this is correct, continue, it defeated the consumer's expectation that that disclosure was being accepted because the consumer was being told all it was doing was confirming the zip code. All right, do you see? This is how specific courts get in looking at what the consumer's perspective is as they're engaging with your website. It cannot be confusing. It has to be clear that they are accepting terms and conditions by clicking that button. Next slide.
There's a real pattern to these cases where if you look at these examples and others, if the consumer's eyes are naturally drawn to something other than the disclosure, you're potentially going to have problems. So if you look at the Subway one, your eyes are not drawn to the disclosure in the bottom. If you look at the other one, your eyes are not drawn to that little disclosure in the button. Nobody would look at those. If you look at it, you say, yeah, I can see it, but nobody would look at it and say, yeah, when you're just clicking through, that's where your eyes are going to be drawn. focus on where your eyes are naturally going to be drawn, because that seems to be one of the motivating factors behind the courts. That's not the official test, but it really looks like that's the emerging trend.
Yeah, let's go to the next slide. I know we're now a little bit over time, but we're going to cut through this stuff so you can see it. Here's another example, right to what Daniel was saying. Look at how this is designed, right? They've got the arrows kind of pointing right to the center of the screen, kind of taking your vision away from the disclosure at the bottom. Again, text offers, right? There's your call to action. You're being diverted away from the disclosures at the bottom. Now, the disclosures are there, right? They're right there on the screen. They're in black against a white background. They're clear. But the court refused to enforce this disclosure because the website form was actively drawing the user's eyes away from the disclosure, right? The consumer experience by design, this was Jeremy's point, by design was taking the consumer's eye to the middle, that's the call to action, and away from the disclosure. And the court says, if this consumer tells me I didn't read that disclosure, I'm going to find he didn't, and I'm not going to find this enforceable. And this disclosure was held unenforceable as a result. Again, holistic, folks. We have to be holistic in our website design and think through what that consumer experience is going to be. All right, let's do the last one here. And thanks for sticking around a little after time. Here's another great example, okay? Right here, we've got the form. See that little green button down the lower left-hand side? There's a little tiny checkbox there. Now this one's different because there's actually a checkbox, okay? This is a nice checkbox case. Terms and conditions, the terms and condition line is highlighted properly, right? The language is there, it's close by the button, all right? So all of that looks pretty good, but what happens? Court says it's unenforceable. Why? You've got a distracting video up in the left-hand corner. You've got a bunch of other distracting content, and the court was really bothered by these green check marks here. These green check marks are identifying positive attributes about the product or service that they're buying, right? It's basically sales material right next to the confirmation button. So the court says, look, if I've got a bunch of check boxes and it's saying things like, I want to hear about, or this is a great product because we give great low rates, and we're going to give you great service, and we're going to take great care of you, right? The consumer, in checking the green box next to the green checks, is thinking they're agreeing to all these good quality things that this product or service provider is going to provide. And it's taking them away from this little tiny checkbox that is much smaller, that actually contains the terms, conditions, and consents that they're accepting as a condition, essentially, of getting all these great products and services. So the court looked at this and said, look, you've got proximity, you've got the terms you need, you've got the checkbox, but I'm still not going to enforce it because, again, holistically, this website is too cluttered and it could confuse the consumer. I think that's the last one. There might be one more. Or is that it? Nope, that's it. Oh, revocation. That's a totally different masterclass. All right, Neal, look, a lot to jam in. I know there's going to be a lot more coverage here. Folks, again.
Some more classes. I want everybody to stay tuned on this. I think this was just absolutely amazing. I want to thank our guests today. I think we're beginning to shed some light on it. This is a very, very important area. It adds a lot of exposure onto clients from a marketing standpoint. I love the points here. We've got some legalese, but don't forget, a lot of you may get this content. There's nuance. Don't take this content and start practicing law. You need to reach out to Eric and to Daniel and to us, and we'll help you begin to navigate. But yes, we're going to have some more classes. I want to thank everybody for joining us. My contact information is there. You can reach out to Eric or me. We will route your questions. We're here to help. I know we've got some materials too that we can also help you with. So in regards to everybody, thank you to my guests. Thank you to our attendees. We look forward to seeing you on the second class, which will be coming out pretty soon. And we will get those questions answered.
Thanks everybody.
Have a good one.